Here we are in lesson 5 of 6 of the 6-part mini course for realtors on reverse mortgages. Welcome back. My name is Todd Christensen, the HECM coach. And today we're talking about something that could stop a HECM, home equity conversion mortgage. Heard that before. A HECM in its tracks, dead in its tracks, if it's not dealt with. So this we're talking about federal loans that are delinquent. So delinquent federal loans. Buyers, they can't have any kind of outstanding federal debts. That includes this not that they can't have the debts, they can't have them in delinquent status. So that includes student loans, tax liens, government debts, any of those. Um, they just won't qualify for a HECM loan if any of those debts are in delinquent status. So lenders generally do a pretty good job of screening these potential buyers for a federal debt status. I have yet to come across any clients who have already met with a lender. None of them have been surprised about this. So if delinquencies exist, clients they have to clear them before they can proceed with the reverse mortgage. As a realtor, you might want to just ask clients up front, maybe make it part of a checklist. And I'm going to include a checklist for you at the end of this mini course that you can use as the basis for any potential reverse mortgage borrowers, buyers, HECM for purchases. So this should be on there, and just so that they are aware right up front what their requirements are. Early conversations, the better. Be aware of this, prevent surprises, clearing out their debts gives them, plus it can improve their credit and their buying power. Now, consumer credit rating is not the same sort of all powerful factor as it is in traditional mortgage, but it is still important. It is still a factor. It is still there. It can influence whether the lender or the borrower has to get what's called a LESA or a LESA life expectancy set aside, where the money gets put aside and pays taxes, property taxes and insurance on behalf of the borrower. But it's still important. So if they decide against doing a reverse mortgage and they've cleared up these federal debts, they'll be in a better position to proceed with a traditional mortgage with you, to buy a home with you. So the last thing you want to hear from a client's lender is, Houston, we have a problem. Now, especially when it comes to federal debt delinquencies, sometimes those can take more than a few weeks to get cleared up. So the solution is pretty clear, pretty simple. Just take care of that debt as soon as possible. So this was a short one, but an important one. And now we're moving forward. See you in the final lesson of this mini course about reverse mortgages for realtors.